Hey folks, let's talk about what's been driving the market, at least in this past week or this current week. So on August 19th, last Wednesday, the Treasury announced it would at least double the size of its longer dated bond buybacks from 2 billion to at least 4 billion per operation. And these target the 10, 20, and the 30-year part of the curve, starting November 9th and ending in early of November. And Bessent later said on CNBC it could even go higher than 4 billion. And the goal of that is to provide more liquidity after the 30-year yield hit its highest levels since 2007. So how this could actually help? So buying back longer term treasuries increases demand for those bonds, and uh, that can actually push prices up and yields down. Remember that when the bond price goes up, the its interest or the yield goes down because it's there when there's demand, then the government will pay you less interest on when buying bonds. So that's how it works. So also lower yields mean cheaper borrowing costs for the government and lower mortgage rates. And also this could help boost the stock valuations because future earnings gets discounted at a lower rate. Also, Bessent argued that current yields do not fully reflect the economy's fundamentals, and that is this is actually part of the Treasury's like big toolkit. So this is one of the tools that they use to lower or to bring down the yields. Also, we've got Tom Lee made a comment on that, and he said that this is actually a wise thing to do, and he compared it like for a company to buy back its own stock when the investors are nervous about the temporary issues with the stock, but this is unrelated to the business itself. And in his view, this is actually not manipulation, and it's a signal of a value that helps separate noise from fundamentals. And just one thing to add to it. So when the Treasury Department announced that they're buying back the treasuries, this doesn't actually mean that the government has to print money to buy back those treasuries. Instead, the Treasury, they have a checking account at the federal bank, and they use the money from that account to buy back those treasuries. So just one thing to add, and I'll see you in the next video. Thank you for watching.